Imagine buying stock in businesses poised to grow much faster than the S&P 500 with a long runway of future growth ahead of them, while also making high growth dividend income, dividends that are safe. And these businesses are laser focused on reaching that vaunted dividend aristocrat status. The three stocks that we're discussing today really are all of these things. High growth, high dividend growth, but still safe and reliable sources of that sweet passive income. Welcome to the Quality Investor. Today, I'm reviewing three incredible businesses that you can add to your portfolio today and reap the rewards for a very long time. These stocks have not quite reached dividend aristocrat status quite yet, but all of them are on the right track. I always discuss the importance of dividend growth outpacing inflation. You want your income growing, but there's a caveat to this. It's just as important that free cash flow grows even faster. Why? We want our dividend to keep growing, and we want that growth for a very long time. Oh, I almost forgot one more thing. Give that like button a quick tap so that we can get into these wonderful businesses. Up first, we have an oldie but a goodie. I'm talking about, of course, the largest business in the world today, Microsoft, ticker MSFT. Here at Dividend.com, and we are looking at Microsoft Corporation. You can see that 22 years of consecutive dividend increases. They currently pay a 0.74% yield, which might seem low, but with the future growth prospects for Microsoft, that yield, especially that yield on cost, should go up dramatically. So why do I believe Microsoft has a long runway for growth? Well, just look at their incredible charts here. You can see even in the last 10 years, they've grown revenue by 10% a year. Gross profit has grown, operating income grown, and most importantly, they grow that dividend by at least 10% every single year. They also show very strong free cash flow growth, which is a necessity to keep paying a growing dividend. And down here, we can see every chart is pretty much a picture of perfection. Their revenue, their dividends, they consistently have more cash than debt. However, trailing 12, a little bit less cash now, but that's due to the Activision Blizzard acquisition. They have a phenomenal debt to equity, and they've done a great job of growing their equity. Focusing on their dividend metrics only here, we can see other very positive aspects of Microsoft. That free cash flow payout ratio has steadily come down since around fiscal year 2016. The yield has come down quite a bit. However, the share price appreciation for Microsoft has been phenomenal over the last 8 years. And down here, you can see they keep growing that free cash flow while just steadily raising that dividend, ensuring long growth prospects ahead for Microsoft. There are a lot of lists out there titled Best Stocks to Own, and all of them seem to include this wholesale giant nowadays, and for good reason. Costco, ticker COST, is in the nobility of retail, and very soon will become dividend nobility as well. Just 5 years away from dividend aristocrat status, the growth story for Costco still seems to be in the first few chapters. Back at Dividend.com, checking out Costco, and we can see that 20 years of consecutive dividend growth, putting them 5 years away. And they do have a yield of 0.57, a little bit lower than Microsoft even. But like I said, with the future growth, Costco should expect that yield, especially yield on cost, will go up dramatically. They even have almost stronger growth prospects than Microsoft. That dividend, 12% per year of the last 10 years. And free cash flow has far outpaced that growth at 17% per year over the last 10 years. And each one of their charts also is exactly what you want to see. Incredible earnings growth, very consistent cash flow growth. And of course, they have more cash than debt, a sign of a very strong company. Looking at Costco's dividend metrics, again, we see some very nice things here. That yield, yes, it has come down quite a bit, but you can also see year over year growth has never dipped below 10%. And the free cash flow payout ratio, very consistent between the 20s and 30s. One thing to notice on this chart, however, is on this dividends paid, the blue bar, you see these large spikes. That means Costco pays out a special dividend to shareholders on a fairly regular basis every few years. Yet another perk for a Costco shareholder. And if you're still here, you might be a bit surprised. Not a lot of people see this as a dividend stock. They're a semiconductor firm in the analog chip space. However, they just recently committed to returning all free cash flow to investors by 2025. So what does that mean for us investors? Well, the growth will be here for a very long time. That stock is Microchip Technology, ticker MCHP, and they're only 2 years away from Dividend Aristocrat status. And the Dividend.com page for Microchip Technology. You can see 23 years of consecutive dividend increases. Certainly not talked about much in the dividend community. They also have a yield here of 2%, which is higher than the technology average yield and pretty good in general for growth-oriented stocks. Looking at Microchip Technology's charts, we see some other great things to love. Strong growth across the board for revenue, earnings, and even that dividend. Now that dividend over the last 10 years has grown at 6%. But one thing to notice here is that growth has sped up dramatically over the last couple of years. And you can see here on their dividend chart, this growth, it looks flat. However, they did increase dividends, albeit by about half a cent to a cent within each of these years. However, now they are really ramping up their dividend increases. On the most recent earnings call, the CEO stated that they have committed to returning all free cash flow to shareholders in the form of dividends by 2025 and to continue that thereafter. So we should expect to see very strong dividend growth from Microchip Technology over the next many years. And the free cash flow and cash flow growth in general really backs that up. Very strong chart right here. And looking at Microchip's dividend metrics, the free cash flow has steadily declined over the last 10 years or so. Now that year-over-year growth, again, has not been strong, but is ramped up very much so in the past couple years. And that is backed by a very strong free cash flow generated by Microchip Technology. And so while they really reinvested back into the business over the last 10 years or so, their very low free cash flow payout ratio means they'll be able to really back up that dividend growth. I talk a lot about the importance of analyzing dividends on this channel. So a great place to continue your dividend journey is my series on dividend investing. Part 1, the Dividend Aristocrats.